Hello and welcome again at Stocks Advisor. Today we'll talk about Chargepoint Holdings Incorporated, traded at New York Stock Exchange, ticker name CHPT. Well, CHPT is a stock that is showing also one of the most classical tendency now on the market for big companies. This is a decline after having a really beautiful growth in the period of November to mid of December, let's say an average overall, and then having kind of deceleration or consolidation period from mid of December to February. So now we have a decline, and the question is, of course, how do we trade here and what is happening? So first, let's quickly look what was happening in general with this stock. We can see that we were starting up actually from the levels of about 10.33 by mid of September, and then having really a nice growth regime all the way until actually the mid of February, where the major decline started. And this period from mid of September to mid of February we can call the classical growth regime. What does it mean? It means that when your free moving averages and price are allocated like this, so you have your price bouncing on top, then you have moving averages 20, 50 and 200. So until this is the case, you can say you are in stable growth, and while this pattern is true, you can just sit on it and enjoy, let's say, the trade. But once the pattern starts to break, you really need to think of actually maybe re-entering, exiting portfolio, maybe entering later or taking some actions. And you can see that this trend started to break already actually just before the beginning of February, or by beginning of February, when we started to pierce moving average 50. Then one final rebound, as always it takes place, like a last hope rebounds here, and then we see that the price started finally to decline. So this was the period of last hope, or the last rebounds before major decline, and now we have a major decline, which goes very interestingly with actually two regimes. It's kind of zigzagging decline. So first one was with this channel that was also severely broken by mid of almost beginning of March, and then recovered. Then we had beautiful recovery from the actually, let's say, around 20 of March all the way till beginning of April, and now we are again in almost a linear channel with a classical classical technically beautiful decline, of course. And it's not a decline, it's beautiful itself. And now what happened today, we have this very interesting big white candle formed, which is also let's say almost within the size of the channel. This is interesting situation because it touched the bottom and almost touched the top of the channel. Usually this means that we might have the breakage of the channel upwards, and if this will be going to happen, it means that overall, we will have, let's say, the pattern which looks like this. So we will have kind of zigzagging, and now we are about to form another, let's say, leg up. So if this is indeed true, if this is indeed the case, it will be quite interesting, because it means that we are soon to rebound. Otherwise, we could, of course, still continue declining, but we will be ready for any situation here. So we will discuss both. So how to trade here? We can see clearly we are sitting also in very nice support level. This triple support actually was confirmed 3 times, and it still might be that indeed we will have a nice let's say rebounds, as I just did draw it. Could be a zigzagging style because it's already 3rd time here, although piercing a little bit deeper and deeper. So how to trade? Very simple. First level to buy would be already within the size of the current, let's say, of the current body, which is between 1990 and 2140 for us. So let's write it down, which will be 1990 and 2140. Let's write it as a call out so we will not forget it. So 1990 and 2140. So this would be the first level to buy, with the hope that we are going to rebound indeed and at least go to the level of moving average or between moving averages 20 and 50. Usually this works as a very strong damper of the price. The same happened, by the way, by beginning of April. Moving average 50 worked as a very strong resist level, and we actually bounced back. So this might be happening. If this is going to happen, what we will have a formation of actually descending resist level, which will be something like this, and almost will follow moving average 50. If we touch again moving average 50 and start declining. If not, we will see. But anyway, this would be the most safe and classical way to as a maximum profit you can take. But for those who trade little bit slower way, but what we advise always at our channel is take the profit from let's say 10 to 15%. Here it's more fastly moving chart, so we advise to take the profit from actually 15 to 20%. Kind of more profit taking opportunities here, but still don't be too greedy. Once you have this, take it, re-enter if needed, but really take it, because the profit taken is taken indeed, and until you press the sell button you don't have the profit. Don't stay too long, because position might expire, and instead of being a profitable position it can become really negative and actually eating up your funds. So this would be the first level to enter. Still, what is possible, it could be broken, or it could be broken even earlier, like for example from moving average 200, the red line, and going further decline. Would be kind of a fake recovery, similar to one we had here by beginning of March. Well, fake recovery with respect to channel, of course, but with respect to a possibility to take a quick profit, it was also reasonably high. So we can still make that up to 15% profit here. But if this is going to happen, there could be next level activating, and the next level would be just these levels where we were trading before. So this is that one between 1669 on the top and 1430 at the bottom. This would be another technical level, and let's also write it here for ourselves. 1430 to 1669. So this would be still within, let's say, the technical decline, within the classical expectations on the technical volatility or technical decline, because it will be much lower than all moving averages, all three moving averages you can see here. And usually when this is going to happen, this works as a very strong attractor of the price, because when all three moving averages are close to each other but the price is much lower, it works as a very strong attractor of the price, and price usually rebounds. So you will be able to make a profit. If we go that low, still will be okay. You don't need to be afraid, because it looks like to be, well, quite reasonably low, but we don't discuss, let's say, stop losses. We just discuss entering more with non-linear averaging down. So while others will be probably exiting with losses, you will be just buying in and preparing to make even more profit. So with this being said, these are the levels to trade here. What still is possible is a negative catalyst. We always keep discussing this and keep encouraging our, let's say, subscribers to allocate some funds to mitigate there. And if we do so, so what does it mean actually? It means that, imagine you have a negative catalyst. Negative catalyst could be coming in any form. It could be bad news, global market situation, whatsoever. You cannot know in which form it will come and what it will be, but if it comes, you want to be ready to average down. You don't want to be caught on surprise and taking unexpected losses. And how to average down there? You need just to keep funds to buy in the very principal levels. And if you look here, the most principal level in this case would be quite low though, but between 1064 and actually 1206, but it's still better to have those funds there allocated, reserved, and being ready to buy in, because if you're ready to buy in there, you will be quite safe with the trade. And although it might take you a little bit longer time, but you will still exit with profit, because the way we tune our, let's say, trading strategy, the way we prepare for buying in, it's that we should exit with the profit. So there are two major strategies. One is let's say, more fast trading strategy when you think of stop losses. And you allocate almost all money in the portfolio, at least dedicated for this portfolio. And another strategy, it's still daily trading, but a little bit, let's say, more smooth and more longer daily trading. So you buy through slowly, you don't think of stop loss, you are okay to spend extra days waiting for the profit, but then you also, let's say, enter slowly and you prepare for rebounds for later. So this is the strategy that we follow, and it's based on so-called mixed analysis that we do at our channel, which is part actually of 3 in 1, being technical analysis, being nonlinear averaging down that we discussed here, and also keeping some funds to mitigate risks if a negative catalyst kicks in. So with this being said, this is the way to trade. And if you think of how to buy through, here it's a classical 5-portion play, meaning that the funds you would like to play here, you can split in 5 portions. Then you can buy with 1 portion through the first channel. If we still decline to the second channel, you can buy with 2 portions through the second channel, and you keep remaining 2 portions just for risk mitigation. If any negative catalyst kicks in, any doomsday scenario happens, you just buy in, wait a little bit, and you will still exit with very reasonable profit here. But for daily traders, again, the profit is 15 to 20%. Of other parameters interesting, we see increase of the volume, which is very nice signal. It might be indeed we are going to already rebound from the first channel, as discussed at the beginning. RSI is quite low, could be also bouncing upwards, causing the price to go high. And MACD is not completely clear. It's still in the negative range. Might make another negative wave, bigger one. So this could cause going to the second level, but also could, of course, recover. So it's not that decisive in this case. With this being said, that's all for CHPT. Now you know how to trade with it, what to expect if the price starts playing up and down. So do it. Good luck with it. Also, if you like our analysis, don't forget to subscribe to our channel. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.